All right, today we're going to dig into the really complex investment story of Tyson Foods. Now, for any investor, this company is a fascinating puzzle, and over the next few minutes, we're going to put the pieces together.
And this is where things get really interesting. If you just look at the top line, the revenue, things look incredibly stable, hovering right around $53 billion. Rock solid. But then you look at the operating income, and it is a complete roller coaster. I mean, look at that. It goes from a massive $4.4 billion profit in 2022, craters to a $395 million loss in 2023, and now it's starting to claw its way back. So this is the puzzle. Sales look fine, but the profits tell a much, much wilder story.
So this brings us to the big question for anyone looking at this stock, right? How on earth can a company that's selling a consistent amount of stuff have its profits just completely collapse and then recover so violently? Understanding this disconnect is the absolute key to figuring out what Tyson is actually worth.
Well, the answer is that Tyson isn't really one business. You have to think of it as a tale of two Tysons, both operating under the same roof. On one side, you've got the commodity beast. That's the beef and pork business. It's cyclical, it's volatile, it's a wild ride. But on the other side, you've got the brand powerhouse. This is your steady, stable business built on prepared foods and branded chicken.
So first, let's dive into that commodity business, because that's where most of the recent pain is coming from. Let's go inside the beast.
The entire U.S. beef industry is basically a slave to the slow-motion wave called the cattle cycle. It's this 8 to 12-year pattern where ranchers either grow their herds or shrink them, all based on how much money they're making. And right now, well, after years of drought and high costs, the U.S. cattle herd is at its smallest size in decades. So for a processor like Tyson, fewer cattle means they have to fight tooth and nail to buy them, and that absolutely crushes their profit margins.
And look, this isn't just some abstract textbook theory. It has a real, massive impact on the bottom line. This number says it all. In the first 9 months of fiscal 2024, the beef division alone lost $310 million. That's what the bottom of the cattle cycle looks like in cold, hard cash.
Okay, so that's the scary part. But now, let's flip the coin and look at the other Tyson, the part of the business that acts as a crucial buffer against all that commodity chaos. This is the brand powerhouse.
And this is the company's real secret weapon. We're talking about a portfolio of household names that you see every single time you go to the grocery store. Jimmy Dean, Hillshire Farm, Ballpark Franks. These are brands that people know and trust, and that gives Tyson pricing power that the raw commodity business just dreams of having.
And here's the proof in the pudding. While the beef segment was bleeding cash, the branded prepared foods segment was just humming along, delivering a really strong, stable, and predictable operating margin of 8.3%. This is the anchor that keeps the entire ship from sinking during the storm.
And make no mistake, this isn't just some happy accident. Management knows this dynamic inside and out. Their entire long-term strategy is about deliberately shifting the company's profit mix away from that volatile beast and towards these much more reliable, higher-margin brands.
So, how are they actually doing it? How is management trying to make that brand powerhouse the real dominant force here? Well, they have a very clear three-part plan.
Their plan rests on these three pillars. First up, automation. They're pouring money over $500 million into robotics to deal with labor shortages and just make their plants way more efficient. Second, they have a relentless focus on value-added products. Think pre-cooked chicken strips, gourmet sausages, stuff that stabilizes their margins. And third, they're going big on international growth, especially in Asia, which is where 90% of all future growth and protein consumption is expected to happen.
Okay, so this is what it all boils down to for you, the investor. Understanding this tale of two Tysons is absolutely critical for how you value this stock and figure out what it could be worth.
And here is probably the most important insight for investing in a company like this. You cannot use traditional valuation metrics. It just doesn't work. If you look at Tyson's earnings at the absolute bottom of a cycle, you get a completely warped picture of its long-term potential. You have to learn to look through the cycle.
So you look at this chart, and at first glance, Tyson's price-to-earnings ratio of nearly 24, it looks crazy expensive, right? Especially when you compare it to its peers. You might think, why in the world would I pay such a high multiple for a company that just lost a ton of money? But with cyclical stocks, there's a really fascinating paradox at play.
And this quote just brilliantly illustrates the counterintuitive logic you have to use. For a company like Tyson, a high PE ratio often shows up when earnings are at their absolute worst. Why? Because the market isn't pricing the company on today's depressed profits. It's looking ahead, and it's pricing in a massive earnings recovery when that cattle cycle inevitably turns back in their favor.
Now, of course, this investment idea isn't without some serious risks. The whole turnaround could get derailed. You, as an investor, need to watch for a cattle cycle downturn that lasts even longer than expected, or sharp spikes in feed costs like corn and soy, ongoing labor issues, and of course, the constant threat of regulatory and antitrust scrutiny in an industry this big.
So at the end of the day, it all boils down to one big question for you. The strategy is clear. Shift away from the commodity beast and towards the power of their brands. We can see the plan. But is it powerful enough to finally tame that beast for good? To smooth out those wild profit swings and make Tyson a more predictable, stable investment? The answer to that question is what will determine the future of Tyson Foods.